week kicked off with the all-share index posting a marginal gain of 0.1% to close at 37,898 points. On oil companies, corn oil and Forte oil are still the leading gainers. Today we saw them gain 5.27 and 5.24 kobo respectively, while other gainers included CAP, MRS and Transcorp. Of course, Nestle Nigeria, Julius Berger, Cadbury Nigeria, Mobil and Dangote Flour were all among those that closed in the red today. David Andorin, General Manager at Lambek Trust and Investment, is joining us from the Nigerian Stock Exchange. David, thank you very much for joining us. And I think a good place to start is to discuss Forte oil and corn oil's upside momentum. And particularly Forte oil, we've seen it gain over 1,000% this year. How big is the risk of this bull run in these stocks? Give us your thoughts.
Thank you very much. Wale is almost tending towards an endless bull run by those two companies. The gains have been very, very massive, and at a point we thought that fatigue will set in, but so far the bullish runs continues in an undiminished manner. Well, one could take a look at the third quarter results of both FO and corn oil and ascribe the current massive demand for those securities to the impressive nature of the third quarter results. But the extent to which the appreciation has gone could therefore mean that along the line there could be some information asymmetry. Right. Because the fundamentals alone may not be powerful enough as a factor to driving those securities to the level where they are right now.
I think most people will agree, definitely, especially with your analysis on Forte oil there. Clearly, this run is way beyond the results. Some people saying that it's because they have invested in the power sector. Do you think that justifies this run?
Yes, it is an important factor that is capable of increasing demand for FO. I tend to agree with them that it's possible. But again, beyond that, because the investment in the power sector alone has not started yielding results, although investors are anticipating that when they take position now, they will reap bountifully into the future. But there is risk attached to such thoughts, you know. However, we have seen, like I said in the past, we have seen Nestle move in a very meteoric manner, and investors who stood on the sideline are probably regretting now that perhaps they should have jumped into the bandwagon when signs of appreciation became evident.
So bandwagon investing is risky, David. But I see your point. Clearly, we've seen Nestle maintain that strong position in the market. A lot of people saying it's overvalued, but it continues to maintain, get that strong interest, particularly from institutional investors. But let's move on to another sector, and that's the insurance space. We saw Law Union and Rock report today about 27% decline in earnings. Another bad result from the insurance sector. What do you think this could mean for the sector going forward, particularly given the fact that a lot of these results are already really delayed?
Yes, indeed. That result from Law Union and Rock, although late because it's the first quarter result, and we have actually gotten several third quarter results from companies operating the insurance sector. And that notwithstanding the massive decline in profit is not palatable news coming from that sector, which is not a favorite of investors right now. But generally speaking, some other companies in that sector are actually high flyers, like Custodian and Allied Insurance, Mansard Insurance, together with ICO and Continental Reinsurance. Those companies are performing very, very well. And some other companies too, like Unity Capital, you know, is coming up with good fundamentals. And so one would say that that sector is emerging from the crisis it plunged itself into during the meltdown as a result of their overexposure to the equities market. But investors have still not developed sufficient level of confidence in the entire sector as to going back massively into that sector.
Okay, let's move on to the broader market. And the trend we're seeing clearly is that the results haven't done too much for the market. We're seeing some gains, particularly with companies like Forte Oil and Transcorp, but when you look at particularly the banking sector, we haven't seen that rally at all. And of course, the results haven't done much for the sector. So given all that we've seen in the Q3 with respect to earnings, what are your expectations for the rest of this year?
Yeah, generally the banking sector is at the forefront driving activities of the equities market. A lot of analysts have described that sector as that which occupies the commanding height of the Nigerian equities market. And so if there is a little sneeze in that sector, it cuts across the entire capital market. And so if you look at the third quarter results that have been released so far by banks, other than perhaps Zenith Bank, GT Bank, and one or two others, the other banks have actually reported decline in their profits when compared to the same period last year. That therefore indicates that the impact of the tight monetary policy is already affecting their bottom line.
Right.
And I don't see how that can be reversed till the end of the year. And
David,
so investors are cautious now.
All right.